Welcome back, my assets viewers. This time we are going to see, is it right time for me how to approach my investment in mid and small cap? That's what we are going to see that. Because we know that, even me know that the mid cap and small cap have delivered a fabulous return. Even in a benchmark level, the small cap has given close to around today's market. That means 19th market is getting closed. From this point in time, market is the mid cap, small cap has given close to around 26.7% return in the last 3.5 months time, and a mid cap has given close to around 23.5% return has given in the last 3.5 months time. You know that in the 3.5 months time, market has rallied substantially because it's predominantly is a bullish sentiment has been expressed by the foreign portfolio investors, because they are little bullish on Indian market. Before we are getting into this video, if you are a first time subscriber to my channel, please do subscribe to it. If you like the video, if you just watch the video till end, if you like the video, please do share it. If you like it, give a thumbs up to us. And if you want to have any information about that market or something, like somebody's asked the question about mid and small cap, that's why this video is doing. If you want any information from us, please put it in the comment box. We'll try to get back to you. So again, we'll go on see that. So now the index, if you look at it, the small cap index on 31st of March 2022, it was around 26,957. Today market, I am just talking just closer to market. I don't have a clear number. It was yesterday's close was 34,014. Today my mid cap has gone by 0.5%. So that means another 300 points have gone up. So that means it should be 34,300 rupees, 300 points. And small cap on 31st March 2000 it was 24,065. Today it is coming close to around 30,000 rupees, 30,000 points. So that clearly shows, in translate into the returns, the small cap has given close to around 26.8% and small cap, mid cap has given 23.5%. In a short period of 3.5 months time, market has gone substantially. If you know that how the market have moved the last 1 year's time, the last 1 year return of small cap is 30.5% and mid cap is close to around 28%. So when you subtract this 3 months return, 3.5 months returns with the 1 year return, oddly market in the 8 months time has given 3 to 4% return. That was the return has given in the entire 8 months period. It is only given 3 to 4%. But when you, because of this rally in the last 3.5 months from April, market has rallied substantially because of the foreign portfolio investors, because they are finding the Indian markets are very attractive, because it's one in the market where the GDP, people are talking about 6-7, and also people are very confident that inflation is coming back to the manageable level, and interest rates are already hit a pause button. Now we are already in a pause button. The market is in a pause button, interest rate is in a pause button, the inflation is under control, and the GDP is higher. So where the FAs will go? So because of that, they are coming and chasing the index level. So because the index are getting support, and normally the people will have a tendency to see that index is getting support, they have a belief that the stock also will try to grow. So it is, and practically it is not like that. I can move the index, but stock price cannot move. But still the industry sentiments will become where whenever the mid and small cap rallies, you will find that lot of inflows come into the small cap, because everybody will have a craze to make money. That's what we see in the last 1-2 months, that SIP flow into mid and small, especially in small cap, is really going good. But you want to know the depth of that market. So look at the small cap fund. I'll tell you the top fund, that HDFC small cap fund has given 42% 1 year return, and Quant small cap has given 41% return. And if you look at it in the 3 years return, Quant small cap has delivered 57% return, whereas the HDFC has given 44%. Okay. If you look at it, the average of small cap, whatever the funds it is there, divided by, add all the returns given, divided by the number of schemes exist. If you look at it, the average is 28.7. Okay, the 1 year return I'm talking about, 1 year in 28.78 somewhere, and if you look at it at 3 years, it is 40.5. Okay, when you look at the mid cap, the 1 year return is close to around 23.34, that's an average. But when you look at the 3 year, it is 30.6, 30.7 somewhere, that's range, because today's market is close. We have taken some numbers and dividing it. So this much of returns we got in the last 3.5 months time. So you are an investors, you have been seen that returns have given a fabulous return. So I think I can also make money in the rally with this mid and small cap. You try to rush and invest, probably you have to tone down your return expectation. You cannot make definitely return, because if you look at a P, the mid cap P is around close to around 27. The small cap, the P is are somewhere around 22, 21 and odd it is there. Small cap, it has moved 16, it has moved to 21. The price earning itself has jumped substantially. The law of average, it is 20% premium. The small cap is also at a 20% premium. Mid cap is also close to around 27 premium, because the average was at 22 to 23. Now it is 27, the price earning. So whenever the price earning is sitting high, we saw that the market is getting corrected. We saw that in close to December, the market P is up, jumped to closer to this level. After we saw that market was corrected by 3-4 months time. So which has corrected substantially. So when you see that because of the market really past return, you are trying to come and jump and invest, probably you have to tone down your return expectation. You have to be very, very moderate. Or else you are want to invest in mid and small cap, that no harm that, because the Indian economy growth story is there, because every reports it is coming out of in favor of India, and because of that FI's money has been chasing Indian market. Though we are trading at a premium, but a lot of monies are keep coming. So in such a scenario, if you are a 5-year and 10-year investors, you do not worry much about that. However, it is there. When you are coming fresh, why you want to invest at a lump sum, you can stagger it. If you are taking a mutual fund route, you can stagger your investment 3 to 4 months time. Please understand, there is no guarantee that the market will correct in 1 month, and then you can do that. It's only a caution we have to take. Whenever the price earning goes beyond particular point, we need to exhibit some amount of cautious, because we saw that when certain levels or P reaches, then we have a very flat market, or the market corrects by 5 to 10%. So if you are ready for short-term volatility, you can, if you are 5 to 10 years of investors, you need not ignore the market level, please get into the market. However, if you think that still I don't want to take too much of risk, I can able to stagger my investments, please stagger your investment 3 to 4 months time. Then that is a point in time you can able to average your return, and then you can, whatever the return market is going down, that will be an additional return for you. So in such a situations, my suggestion is that if you are a long-term investors, stagger your investments. If you are stock investors, you are able to identify mid and small cap, please identify. If it is at bottom, it has a potential you can do. If you don't have a clear idea about how that, but better you need to stagger your investments. Either you are mutual fund investor or stock investor, you don't have any other options. There is a possibility market going flat or likely to corrected by 5 to 10%. That could be possible because of the price earning. I am not telling, it's only I am talking about in terms of price earning, because of the few fund managers whom I listened to them or interacted with them, they are also feeling the same feeling that the mid and small cap has gone to certain premium. From here on, the growth level should not be there great for next couple of more months. So when things are not going to be bullish, there will be a tendency for people to take the profit out. When people start to take the profit out, probably the index level will get corrected. In turns, it will reflect in all your stocks. So if you are an investor coming for short period of time, better don't jump and invest in mid and small cap unless you do all your thorough study. If you are a long-term investors in a mutual fund, there is nothing harm to invest now, because assume a market corrects by 10%, assume if you are a 10-year investor, how much it will happen? It's 1%, it's going to be an average. Per 1 year, you are going to lose 1%. When you do a compounding factor also, if you look at it, it will be oddly around 2-2.5% return only, it will impact on the final returns. So it will not be major impact when you invest now also. If market corrects by 10%, you hardly lose 2% if it is 10 years return. If it is going to be 5 year, your investment or time horizon is 5 years, probably you lose somewhere between 1.5 to 1.6% even on a total return. How you have to understand, if it is 15% return you got after 5 years time, it should be actually 16.5%. If you are invested at 10 years time, if you should have got 22%, you will get somewhere between 20 to 20.5%. So that it's going to be only marginal difference if you are long-term investor. But short-term investors, please, this is not a great idea to jump and invest in a small cap because of the market have rallied. You need to be a little cautious at this point in time or stagger the investments. So if you try to follow these strategy, it will be good, because you and me know that the market capitalization of today's level, 70% to 75% is constitute large cap, balance 30% is constitute mid and small cap. That means market is skewed towards a large cap of market capitalization. As an investor, you want to take exposure to mid and small cap. If you are very aggressive, you can take mid and small cap together 50-60% of your portfolio. If you are above 50-55, you need to restrict your mid and small cap to your overall portfolio somewhere between 30 to 40%. If you use such a strategy, you need not worry about the market is all-time high or nothing. So if you use this strategy to build wealth over a longer period of time. This is Suresh Parthasarathy, Certified Financial Planner, founder, My Asset Consultation. If you are a first time to my channel, please subscribe. Because if you know that the non-subscriber currently at 52% of my last video. We had close to around 11,000 to 12,000 views. Out of that, 52% of the viewers are the first time viewers. They are not a subscriber to my channel. And balance 47% of the people who have been subscribed to my channels, or they browsed through somewhere and they got into that. So this is why if you are not subscribed to my channel, please do subscribe. Bye. We'll see you with some other good video.